Welcome back. Well, the SGX is suggesting a bit of a flattish to a mildly negative start to trade. 10-15 points lower. Well, that's par for the course, I would say. But plenty of stock to discuss, and we have Anand Tandon, market expert, who joins us. Hi, Anand. Morning. Thanks so much for joining in. Well, Anand, we have been getting results flying in thick and fast. I wanted to ask you about a company that came out with its numbers, UPL. It came late in trade yesterday. They've maintained their guidance out there. The margin beat was something that was impressive. And they're also talking about reducing debt by $650 million. Any view on the stock?
Well, structurally, I'm quite positive on that sector overall. I think, company like UPL with with the large number of countries that it covers, pretty much de-risks you against any single country exposure. And importantly, with the deleveraging that we are talking about, debt, which was very high and was a cause of concern for the market, will hopefully become a little less of a concern. It still remains a little high, but despite that, I think some of the concerns will be allayed. Breaking up the business into smaller parts or having the separate investors coming in for each segment is always a good idea in terms of sharpening the focus on the particular business, as well as making sure that cross-border business transactions become a little more transparent. So overall, I think good, positive on the sector, positive on the move that they've made. Valuations are not particularly stretched, and it seems to be one of the better plays to look at in this market.
Okay. Anand, a big takeaway from the auto sales this month is that the premiumization trend continues, right? I mean, record high Royal Enfield sales, TVS iQube, the electric vehicle, has done very well. Even in the rural market, things are improving. M&M has reported record high tractor sales. What's your pick of the pack here?
Well, like you said, I think premiumization is the only factor that I can see that can drive domestic growth at this stage. So I would stick with manufacturers which have a large portfolio of SUVs and EVs, and that would likely to be the continual theme. On a turnaround kind of business, maybe you could look at something like a Bajaj Auto, largely because of the fact that I think they've kind of they're trying to do a little better globally, and their guidance seems to be in that direction, and the valuations have reached reasonable levels now. But that's a kind of a little bit of a contra bet at this stage. On the momentum side, I think SUV manufacturers probably the best.